Hey guys, what's up? Welcome to another episode with me, Shushank Godappa. And today is not a very exciting episode only because in the last 48 hours, a lot of nonsense has happened in the whole world. Now, we have seen the Iran, Israel, US war happening. It's not obviously a good sign. Obviously, I don't care. I'm not saying from a portfolio perspective. Portfolio obviously is not good. But overall, from what's been going on, I think this is the fourth or fifth war that we are seeing in the last few years. Definitely not a good sign. And whenever such wars happen, a lot of people also get affected. A lot of people get injured. A lot of people lose their loved ones. And again, we go back to the same thing. So it's again not good. But today I thought it's better that I come and do a quick video and talk about what's going on, what are we looking at, what are some analysis that is going on from an analyst standpoint. So I thought I'll come quickly and show you all of this, right? So right now, from what I can see, that Nifty is definitely gone down below the 200-day moving average. Please, for all the people who are watching, do not panic sell. Okay, please do not panic sell, because if you panic sell today, you are already at a very low point of selling, right? Every time Nifty breaks the 200-day moving average, it has usually gone down approximately 7 to 10% from the break. So last time it had gone down 8%. This was during the Indo-Pak war. Right now, we have already gone down around 2%, right? The market did open minus 3% in the morning, but then somehow recovered. But then the Aramco news came out where one drone hit Aramco, Saudi Aramco's refinery. German markets opened minus 2%. All the other European markets opened minus 2%. And now it is already at minus 2. So selling here doesn't make a lot of sense. Buying here makes more sense, whether it is your mutual fund, whether it is large cap companies, whether it is fundamentally strong companies that are affected today at minus 4-5%. Today would be a good day to take a small top up. I would not say put all your money into it, but a small top up definitely is doable, because look, Trump is saying that this would go on for more 4 weeks, right? 4 more weeks this war would extend on to. If this war gets extended, and if you see that the attacks that are coming now are also becoming bigger and bigger. Now they're hitting refineries, they tried hitting key spots in Dubai. If it becomes bigger, then I think at least for another 2 months or 1 month, we would be below 200-day moving average. Nothing to do with India. India's fine. We have all our trade deals in game, but it is going to affect a lot of industries. Why? Because oil has shot up. Oil has shot up quite a bit. And if oil goes up, US definitely becomes their biggest advantage, because if there's no Iran oil, most of them has to buy Venezuelan oil, and Exxon and Chevron will do well. And I'll show you some US companies also today. But Indian companies definitely get affected. Two companies that got affected the most, I think this time was one is L&T. If you see L&T, L&T actually got affected a lot. L&T had just broken out all-time high and was really enjoying its upward journey. But then today it fell down quite a bit. It's down almost 6% from the top. This is because 35% of L&T's order book is in the Middle East. Now, most of these orders, there's a very high chance will be paused, because Middle East needs to fix their own problems now. They need to reevaluate everything. So these development-based orders would definitely stop. Another company that took a massive beating was Indigo. As you can see, Indigo is already having so many troubles, and now it has again gone down approximately 5% again. So Indigo is also down around 5%. Now, why is this the case? Almost 6%. Because all the disruptions of flights have happened. Air India has stopped. Indigo has stopped. A lot of loss is happening for them. That got hit. Adani as well got hit. Adani Green Energies also got hit today. So these are three companies that got hit a lot. Honestly, if you think about it, these are the three companies that have got hit a lot, which is obviously not great. And if I show you our Nifty 500 today, which is almost like a red light therapy, this is how the red light therapy looks, right? Today, it is all pretty much red, and the only company that looks interesting is Bharti Airtel even today, mainly because Bharti Airtel had a meeting and they said that they're going to increase the dividends, they're going to increase their ARPU. So Bharti Airtel and is not affected by this war. So I think Bharti Airtel is looking okay. Coming to gold and silver, definitely gold is doing better. Silver is doing decent. Gold has reached all-time high again. Oil is going up a lot, right? Now, India obviously is a wait and watch. I would say buy on dips right now. Definitely not a sell. Definitely not a sell, but buy on dips and wait and watch, right? Coming to US has a lot of interesting options if you want to play. One is your defense companies are already shooting up. If you look at RTX, right, they have started shooting up. I think the pre-market, it's not showing here, but the pre-market opening is 10%, right? So all the companies like Lockheed Martin, right? If you see LMT, Lockheed Martin is also going to shoot up today. So these are companies that are already sitting at highs and they're going to shoot up much more right now. If you look at some interesting plays apart from this, you can check out one more thing, because oil is going up. Oil is going up a lot. And if this continues, the more this continues, oil, which is what's at $50 levels, has now reached $70, $75 levels, will go up to 100 levels. And that is scary. Anything above 100 is scary, right? But if oil goes up, I will show you what you can look at. One is crack. Okay. Crack is basically an ETF, Van Eck Oil Refineries ETF. Now, this is again a very interesting ETF. You can see that this ETF has been doing well in the past. You can see this. So this is the Van Eck Oil ETF. So this is the oil refineries ETF. But today, as you can see, one of the oil refineries got hit, which was Saudi Aramco. But this company, if you see it, it has companies like Phillips 66, Ineos Holdings, Valero, Reliance Industries, Orlen. So all the biggest refineries in the world will be working overtime, and this is something that you can look at. Another thing you can play is HAP. This is something that we are very interested in internally. So if you look at HAP, HAP is basically the natural resources ETF. And if you look at how this looks like, wow, see this. This is how the natural resources ETF is looking like. Beautiful, because if the war continues, then natural resources impact will be high. And this has been going up since the start of 2026. It has been always flying. Look at this. So it has been in a very good momentum. And I believe it should continue going in this momentum. Lockheed Martin type stocks will also do well. And if you want to see what are the constituents of this one, it is Deere & Co., which is a tractor-based company. Exxon Mobil and Chevron are doing phenomenally well. Both Exxon and Chevron are key beneficiaries of the Venezuelan crude oil, Nextra Energy, Bayer, and many other companies, right? So this is again a very interesting setup. HAP looking very interesting. You can also check this out. But yeah, again, gold, silver are very basic. I don't want to go into them. I think gold, silver, if you look at IIU, gold, silver is pretty basic. Nothing wrong with them, right? So they are obviously on the rise, and they will go up, go up, go up, and they will go towards all-time high as well. So gold, silver are okay. Again, I would not, I would not be too bullish on gold right now, only because it is little overextended. It is going towards all-time high. So I would take a small pause on gold. But if I'm in India, again, there are some confusing things like, for example, why ONGC didn't go up, why Oil India is falling. These are companies that should have gone up. Reliance is falling. Shipping stocks, which are supposed to do well, is falling. So there's a lot of selling pressure coming on India. That means jo bacha kucha FIIs hai, wo bhi nikal ke paisa, they're going away. And the only company that won today was, let's say, Solar Industries, right? Again, because it is in that entire department of missiles. But yeah, it is not looking good. And I hope it doesn't get dragged, because if it gets dragged, we might not see all-time high anytime soon, maybe even until the end of this year if it continues this way. So hopefully either US gives up or Iran. Doesn't seem like they're giving up, but it was US's situation to start this war. So hopefully they should just go into a peaceful zone and say, you know what, let's call it a day, right? But again, until that, we are in terrible times, we are in tough times, and I would say that people don't panic. I know it's been horrible. It's been 15-18 months of not seeing any returns. I understand that. Me as a fund manager also, it's very frustrating to see all of this, right? Even when we manage a small case, it is just so hard, even though it is profitable, but it's been very, very, very hard. I'm not lying to you, right? So I hope we come back out stronger from this, and I hope we become better as individuals also. And a big request, I see a lot of people on Twitter and all trying to demean Dubai or other countries and say, look at this, India is so good, Dubai is so bad and all that. Let's not go to that point right now. We have not reached a point where we are so insensitive about war. Let's see how things goes. Obviously, we don't want to have anything bad about others, because Dubai also gives a lot of revenue to India, right? So please understand the other side of things also. That all the people who go to Dubai, they send a lot of money to India, right? Mainly in the South Belt, a lot of people are in Dubai. They remit money back to India, which makes our foreign reserve stronger. So let us not go to that point where we are insensitive towards war. Be good humans, and just get knowledge as much as possible, and be careful about your portfolio. Start averaging it. It is the best time to do it. Okay, awesome. Chalo. This is me, Shashank Udapa, signing off. I thought I'll make a quick video for all of you guys, because I know some people would be a little clueless and maybe a little scared also. So don't get scared. Relax, and we will get past this as well. Thank you guys. Take care. See you. Bye bye.